Commodities are in vogue. This report was published in the Associated Press on March the 10th, 2022 at 6:57 a.m. Summary. President Biden implemented a ban on crude oil imports from Russia, which caused crude to hit $130.50. Nickel has gone through the roof as a consequence of supply issues related to the Russian invasion of Ukraine. Green energy and other possible energy sources cannot, at this point, replace crude oil. Fundamentals. President Biden implemented a ban on crude oil imports from Russia, which caused crude to hit $130.50. It's a bit of a buy the rumor and sell the fact, since crude oil has appeared to put in a top at $130.50. It remains to be seen the level of buy and demand with Russian crude oil now out of the market. Prices for gas are rising fast, which is about $4 a gallon in the U.S. Nickel has gone through the roof as a consequence of supply issues related to the Russian invasion of Ukraine. Russia produces about 30% of the world's grain and is a major oil and gas producer. Southwest Ukraine produces large amounts of natural gas and oil. Equity Management Academy CEO Patrick MontesDeOca said, "The war, to a large degree, is a war over oil and gas. Green energy and other possible energy sources cannot at this point replace crude oil. The war has made it clear that crude oil continues to play a critical role in the global economy. The Western sanctions are breaking the back of the Russian economy. One issue is whether the oil embargo will spread to other commodities, which would further harm the economy since so many commodities are already in short supply and we have inflation at 40-year highs. Interest rates remain negative in relation to inflation. The situation is putting a great pressure on the Fed to increase interest rates. The 10-year note has reverted back up to 191. We are watching the 10-year note and bonds to watch any signs of stagflation or inflation. Yesterday, the 10-year note hit 187 and then ran back up to 191. It was at 135 a few months ago. If we hit 2.5 on the 10-year, it will be an inverted curve and it will be a sign a recession is underway. The cost of money appears to be going up, slowing the economy down. Wheat has exploded from less than $6 a bushel in March of last year to $13.63 yesterday, March 8, 2022. We are getting a bit of a pullback today. Corn is up to $7.82. Soybeans have a high of $17.59. The market is afraid there will be an issue of supply. They are a major part of the global economy, and if Russia and Ukraine can't export supply, will have to come from the Americas, which are experiencing droughts. The invasion, on top of the supply issues, drought and inflation, MontesDeOca said, are all just going to drive commodity prices higher. What Putin does next is unpredictable, which will only make the global economy even more fragile, with inflation, supply chain disruptions, and rising tensions between the U.S. and China. I wanted to share this report to give you a kind of an update here on what's going on fundamentally with the Russian situation, but what I would like to do here is refer to a report that we published on October 21st of 2021 regarding the gold market, the VCPMI 360-day cyclical supply and demand annual report for 2021-2022. And on this report, we took a look basically at the annual cycles, the seasonal cycles, and we came in this year with a target of 2003 to 2271. Now, the Russian invasion basically precipitated the move to accelerate based on the fundamentals, based on the technicals, based on the seasonal picture that we anticipated back in March of 2021. The low here was roughly in that 1722 area, and this is when it anticipated a rally to 2003. We got up to 2078.80 as of yesterday, but you can see a little bit of a reversion unfolding. Now, what I want to point out to all my traders here that are following is that we have entered into an area that's called distribution of supply. That it pretty much indicates on the weekly all the way up to about 2030. And the monthly targets for the rest of this month give us a range of about 1995 to 2080 as the area of distribution of supply. And what we saw here yesterday was the market rally all the way up to 2078.80, very close to the 2080 target that was anticipated, and the market had reverted as expected in this area of distribution of supply. So for the time being, it appears that the gold market is overbought, and corrections potentially can bring us back down to about 1892, which is the monthly average so far for the rest of the month. Below 1892, we have the support level starting at 1807 all the way down to 1704. So we're looking at the market basically being at the extreme above the mean. And the likelihood is that we will see a reversion back down to about 1892. If we get a close below 1995, it would activate a short trigger. In the gold market. On silver, you can see the silver market also has met the targets, the weekly targets of 2709, with a high that we made this last week of 2749. This week, we made a high of 2749.50. And that is also right into this area of distribution of supply that's recommended for you to take some profits. This is resistance. This is where you complete the pattern. It looks like we have entered into a short trigger, and the weekly signal has a target of 2532. We're trading below the daily average, so we have a bearish price momentum. And based upon what we're looking at here in terms of gold and silver, it's recommended to sell into this area of resistance, to take profits and sell into this area of resistance, lock in profits, synthesize your longs, or look to get on the short side of gold and silver. And this is pretty contrary to the fundamental picture that we have, that everybody's looking at gold and silver right now as a safe haven to what's happening in this geopolitical crisis that we have with the Russia invasion of Ukraine. We have suffered a correction in Bitcoin after making a high yesterday of 42,715. We've reverted back down below the weekly average of 40,000, but we have come into an area of support daily, and we have potentially what appears to be a buy trigger daily on a close above 39,482. Once again, ladies and gentlemen, the algorithm identifies this area in blue as the area of support, the area where you want to cover your shorts or potentially get into the long side if the signal is activated by a close above 39,482 using the 15-minute bar chart. So we have a little volatility back into the market here as this Russian, again, issue becomes greater than anticipated. We have a situation that potentially can cause a major disruption in the supply and demand of commodities. Crude oil is one of them. The grains, wheat, corn, soybeans is another. And we're looking at soybeans making a high of 1734 as of yesterday, and this is just the beginning of what is going to put a lot of pressure on the inflationary aspect of prices here. The producer price index, I believe, just came out this morning indicating 40-year highs. 40-year highs in inflation, on top of obviously what appears to be a supply shortage, a supply concern, once again, outside of the pandemic that we were just coming out. Now we're getting the possibility that supplies can be banned or eliminated from that area. So the demand in terms of grains, in terms of energy, crude oil, basically is turning to other countries outside of the region. And in fact, unfortunately, there are discussions with Iran and Venezuela in act of desperation, it seems. Saudi Arabia is shying away from this to the United States. And so it appears that the globalists' dream have been shattered completely by this Russian invasion of Ukraine. And as we unfold into this crisis here, we're going to make much more clear, basically, the real reason why, Putin invaded the Ukraine. It's all about natural gas. It's all about crude oil. Russia wants to be the number one leader, producer in crude oil and natural gas, so they can control and dictate the world economy. And he's taken advantage of the fact that there's been a lot of rhetoric, political talk about green gas and, clean energy and so on and so forth, substituting charcoal, crude oil, and so on in terms of energy. Solar, wind. But we're not there enough to produce the amount that we need in order to substitute the demand for crude oil. So the commodity of crude oil, black gold, has taken the reign again in terms of dictating the world economy. And as we begin to see more problems developing here with regards to supply, it's going to be impossible even to obtain nickel, and to obtain some of the critical supplies that we have coming out of the region, metals, commodities. And this is a black swan, an unexpected black swan that is taking the world by a storm, on top of really what appears to be a very fragile and weak world economic system, riddled with debt and pressured by negative interest rates. So it's a question of how high we're going to see the price of gold, silver, and basic commodities go until such time that we see some kind of resolution unfold, and maybe Russia begins to feel the pressure economically that's being put on their own economy as a consequence of this. So the whole world is suffering for this. And I'm not sure, how this whole thing is going to end, but it doesn't appear that it's going in the direction that Putin was expecting. And so the question is, what is to expect from Putin as he begins a decline in his own country in terms of leadership as a consequence of this, what I believe was just a tremendous mistake to do this at this point in time. In this fashion. So once again, it's all about crude oil. It's all about natural gas that we're talking about. We're talking about going back to basic natural resources, commodities, which are the essence of the world economy. And obviously the pressure of prices increasing tremendously, the pressure of the Feds possibly reversing course with regards to interest rates, with regards to tapering, is really causing the U.S. dollar potentially in jeopardy as the world's reserve currency, the petrodollar. We are beginning to see a major shift in the paradigm, you might say, of the monetary system. And the dollar right now, short term, is being supported by this crisis. As always, when there is a crisis, people run to the US dollar as a safe haven. But I'm not so sure how safe it is when we have this tremendous inflation eating away, chipping away under the veil of negative interest rates and potentially more stimulus, particularly for the Eurozone. I think they will be and are in a more vulnerable position than the United States with regards to the dependence on crude oil, and obviously how that is going to affect the economic stability of the Eurozone. And that's going to determine basically the policies that they're going to follow or apply with regards to interest rates. So a lot of cards seem to be unfolding here, and they need to be played out to clearly see more the direction and price discovery of a lot of these products that have been tremendously undervalued and are continuing to be undervalued as the dollar continues to decline in purchasing power. Let's continue to watch the market here for the rest of the day. For those that are interested in joining me in my live trading room, please like and subscribe. And we are welcoming trials. If you would like to come and see for the rest of the day, please let us know. Like and subscribe. And in the meantime, my friends, have a great trading day. I'll talk to you later on.